Okay, let's start now. So we're going to start with the balance chapters. We'll start with standard costing. I think there are some four questions on this. Again, very good problem. So let's start going through that. Go through question one. Go through question one. ABC Limited operates a system of standard costing in respect of one of its products, AH1, which is manufactured within a single cost center. Standard per unit is as follows: material cost is 20 kilograms at a price of 24, wages is 72 per hour and 5 hours are allowed, fixed production overhead is 100% of wages. During the month of April 2022, following were incurred: actual price, wages cost, fixed production overhead. Variances are as follows. You are required to calculate the following: material cost variance, budgeted output, quantity of raw material purchase, actual output, actual hours worked, actual wage rate per labor hour, labor cost variance, production overhead cost variance. Go through this. Go through the question. Okay, this is basically called as a reverse working question, and it covers material variance, labor variance, and production overhead variance, fixed production overhead. They have given certain variances in the question. Using the variances, we'll have to get the balanced data. So what we do in these type of question is we first somehow get the computation table done. So our focus would be on getting the computation table done. Once the computation table is done, we'll be able to answer all these eight requirements. So I need a computation table for material variance, need a table for labor variance, need a table for overhead variance. So all the three we will have to get the computation table: material variance, labor variance, and production overhead. All the three, once the computation table is done, we are kind of done with the question. So this is a single material situation, single labor without idle time situation, and for production overhead it is without calendar variance, because in material we have two situation. In material, when we do, we have two situation. Here it is a single material situation, single labor situation, and production overhead, whatever it is without calendar variance. So let's do this. Note 1, material variances. Material variances computation table. We will first get the computation table alone, then we will answer whatever they've asked in the question. Computation table for material variances. Single material situation. I hope you remember the computation table and other things. Single material situation. The table will start with SP into SQ, SP into AQ, AP into AQ. Standard price into standard quantity, standard price into actual quantity, actual price into actual quantity. These situations we have, three items we have: SP into SQ, SP into AQ, and AP into AQ. Let's fill whatever is available. Standard material inputs: for 1 unit you need 20 kg of raw material. We need actual output. Standard quantity is always computed with the help of actual output. I don't see actual output in the question. In fact, that is one of the requirement of the problem. Actual output is to be calculated. So I am writing in 24 into price alone. I am writing 24 into We don't know the standard quantity. We don't know the actual quantity. Actual price is 22. 22 into 24 is the standard price. 22 is the actual price. I have material price variance. Material price variance is this SP into AQ minus AP into AQ. When you do this, because you have SP, AP, AQ will become balancing figure. AQ is going to become balancing figure. So material price variance is equal to SP into AQ minus AP into AQ. SP into AQ minus AP into AQ. Material price variances SP into AQ minus AP into AQ. Price variances 4,80,000 favorable. Favorable means you'll have to do plus 4,80,000. Favorable is plus 24 into AQ minus 22 into AQ. 24 into AQ minus 22 into AQ. Net it will be 4,80,000 is equal to 2 AQ, and AQ is equal to 2,40,000. We are not calculating any variances as of now. All that calculation we'll do it in some time. Originally, I want the computation table done. Actual quantity is 2,40,000. Actual quantity is different and actual output is different. Okay, cannot link them together. Actual quantity 2,40,000. Actual quantity is 2,40,000. Any doubts on the AQ number? Actual quantity is 2,40,000. Then I'll have to calculate the other variances. We are done with AQ computation. We'll now do the next variance, which is use the next variance. Material usage variance is equal to, somehow the computation table needs to be completed. SP into SQ minus SP into AQ. SP into SQ minus SP into AQ. I have SP, I have AQ, SQ will become balancing figure. Usage variance is also favorable. So plus 8,000 is equal to 24 SQ minus 24 into 2,40,000. Solve this and let me know the SQ figure. Please solve and tell me the SQ figure. 24 SQ minus 24 into 2,40,000. 24 into 2,40,000. Tell me the sorry. Sorry.
2,42,000.
Okay, 2,42,000. 2,42,000. Table is done. We will see the requirement later on. First, I have to complete the table. Any reverse working question, completion of table is the most important part. So we are done with this table. I'll move to the next variance. We are done with this table. We will move to the next variance. Objective is to complete the table. Material variance table is done. Material variance table is done. Let me know if there are doubts. Computation table for labor variances. Computation table for labor variances. Labor variances. Again, single labor without idle time. SR into SH. SR into AH. AR into AH. We'll see whatever is available, we capture that. Balance we will try to calculate. SR into SH, SR into AH, and AR into AH. Standard rate is 72 per hour. 72 per hour. SR into SH, SR into AH, and AR into AH. Standard rate is 72 per hour. Actual cost is 43,92,000. I don't know the breakup. but the actual cost is 43 lakh 92,000. The actual labor cost is 43 lakh 92,000. Now I have been given two variances: labor rate, labor efficiency. Labor rate is this minus this. Efficiency is 1 minus 2. I cannot use efficiency as of now because I don't know SH, I don't know H. So let's use the rate variance first. Labor rate variance is equal to SR into AH minus AR into AH. This is the formula. We have explained the formula logic control in detail earlier. Labor rate variance is equal to SR into AH minus AR into AH. This is adverse. So negative 69 120 is equal to negative 69 120 is equal to 72 AH 72 AH minus 43 lakh 92,000. 72 AH minus number was 69 120 is equal to 72 AH minus 43 lakh 92,000. Please get the AH number. Solve much?
40.
Sorry,
60,040.
60,040. 60,040. I copy the same 60,040 here. Actual rate is balancing figure. Copy 60,040 here. Actual rate is balancing figure. Actual rate is balancing figure 73.15. 73.15. 73.15. Any doubts on this? Then we will have to use labor efficiency variance. Labor efficiency variance, which is equal to SR into SH minus SR into AH. SH minus AH. SH will become balancing figure now. 33 120 is equal to 72 SH 43 22 880. SH will be balancing figure. Calculate and let me know. SH is going to be balancing figure. Please calculate and tell me.
Sir, 59 580.
59.
580.
Okay.
Sir,
No, no,
62.
no, no. It can't be 59 580. It has to be more.
500, sir. 60,500.
Okay, 60,500. It has to be more than your actual because efficiency is favorable. It has to be more. 60,500 is right. 60,500 is right. Objective is to get the table first ready. Then I'll answer whatever question is asking. Labor variance table is done. Working note 3. Computation table for overhead variances. Computation table for overhead variances. Fixed overhead. Fixed overhead variance. They've clearly mentioned fixed overhead. SR into SH are SR into AO. SR into SH is otherwise called as SR into AO. SR into AH is otherwise called as SR into SO. SR into BH is otherwise called as BFOH and AFOH. This is without calendar variance. Okay, now question has clearly mentioned that your overhead is 100% of wages cost. So if wages is 72 per hour, overhead will also be 72 per hour because it is 100%. So this is same. First column and second column is same. 72 into 60,500, 72 into 60,040. Because the rate is same and the hours are also same. SR into SH 72 into 6,500 and 72 into 60,040. 72 into 60,040. BFOH is 40, sorry, AFOH is 45 lakhs. Actual cost is 45 lakhs. Actual cost is 45 lakhs. Getting the table, somehow completion of the table is very critical. Some variance will be there which can help us in getting BFOH. They have given FOH expenditure variance is equal to BFOH minus AFOH. FOH expenditure variance is equal to BFOH minus AFOH negative 1,80,000 is equal to BFOH minus 45 lakhs. BFOH is 43,20,000. He focused on getting the table done. Focus was on completing the table. 43,20,000. Can split this as 72 into 60,000. 72 into 60,000. 72 into 60,000. Okay, now we are going to answer whatever the question is asking. So working note 4, solution. Working note 4 is solution. We will now only answer whatever the question is asking. Now we were doing the base ready. We got the base ready. Now we are going to do the calculation. Now we are going to answer what the question has asked for. First one is material cost variance. Material cost variance is equal to SP into SQ minus AP into AQ. SP into SQ minus AP into AQ. 58 lakh 8,000 minus 52 lakh 8,000. 88 minus 5280. 5 lakh 28,000. This is the material cost variance. 5 lakh 28,000 is the material cost variance. 5 lakh 28,000 is the material cost variance. Next, second is budgeted output. Now, for budgeted output, what we will do is we have the budgeted hours here. We have the budgeted hours in fixed overheads. Budgeted hours is there in fixed overhead. So we say 1 unit is equal to 5 hours. 1 unit is equal to 5 hours. That is the question saying 1 unit will take 5 hours. Standard wage rate is 72 and 5 hours are allowed to produce 1 unit. 1 unit equal to 5 hours. Budgeted output equal to budgeted hours. Budgeted output is equal to budgeted hours. Your budgeted output is based on the budgeted hours. 1 unit equal to 5 hours. BO equal to BH. Budgeted output equal to budgeted hours. Question mark equal to 60,000 hours. So my budgeted output is 12,000. Budgeted output is 12,000. 12,000 units. Budgeted output is 12,000 units. Point number 3, we have already calculated. Quantity of raw material purchased is equal to 2,40,000. We had earlier calculated this AQ, actual quantity. Quantity of raw material purchased 2,40,000 kilograms. Quantity of raw material 2,40,000 kilograms. Actual output. Now, standard time is calculated with the help of actual output. Standard time is calculated with the help of actual output. I have in this question the standard time. I've already calculated the standard time. So I'm repeating this format. 1 unit is equal to 5 hours. Actual output is equal to standard time. 1 unit equal to 5 hours. Actual output equal to standard time. Equal to standard time. Standard time was 60,500. So question mark equal to 60,500 hours. 12,100 units is equal to 60,500 hours. So actual output is 12,100 units. Actual output is 12,100 units. 12,100 units. Actual output 12,100 units. Next is actual hours work. We've already calculated this. In our variance calculation, this was done table. Actual hours worked is 60,040. Actual hours worked is 60,040 hours. Some of the data points are already calculated. Actual wage rate per hour is equal to 73.15. Again, already calculated. 73.15 per hour from the computation table. We are taking all these figures from the computation table. Computation table said 73.15. Labor cost variance. Labor cost variance is equal to SR into SH minus AR into AH. Labor cost variance SR into SH minus AR into AH. $43.56 minus 43.22.880. 43.56, not 43.50. 43.56 minus 43.22.880. Not 22.880. Sorry. 43.92. 43.92. 43.92. Adverse variance. 36,000 adverse. 36,000 adverse. Objective was to get the computation table. Once that is done, we can keep answering all the requirements. Production overhead cost variance. overhead cost variance is equal to first column into the last column, SR into SH minus AFOH, actual fixed overhead, minus 45 lakhs. 1,44,000 adverse. Cost variance is adverse. 4356 minus 45 lakhs. Minus 45 lakhs, 1,44,000 adverse. Any doubts on this question? Excellent problem. Reverse working. We are doing reverse working and getting to all the numbers. Any doubts on this? Any doubts in these numbers? I hope this is clear then. Okay, let's proceed to the next question. We got all this. That's why. So finally, we have written a summarized solution. So finally, we have written that summarized solution. So finally, the summarized solution is written here. So we will continue with the next question now. Let's go to question 2, material variances. Ronak Minerals Limited operates in iron ore mining through open cast mining method. Explosives and detonators are used for excavation of iron ore from the mines. Following are the details of standard quantity of explosives material used for mining. Particulars, rate, standard quantity for iron ore, standard quantity for overburden, SME, detonators. Standard stripping ratio is 3 is to 1. There is 3 cubic meter of overburden soil to be removed to get 1 ton of iron ore. During the month of December 2021, company produced 20,000 tons of iron ore, removed 58,000 cubic meter of OB. Quantity of explosive material used and paid for the month is as follows. You are required to compute price variance, quantity variance, and cost variance. Go through this. Okay. In this problem, I am having two types of raw material. SME is one raw material and detonators is another raw material. We also have two different types of finished product. Iron ore is one finished product, overburden is another finished product. So this is multiple raw material question. FG is also multiple raw material means we will have in between an item called RSQ. In between an item called RSQ will come because this is multiple product. This is multiple product. Multiple raw materials are there, multiple FGs there. FG can be multiple. If you have single raw material and multiple FG, then RSQ will not come. RSQ will come whenever you have multiple raw material. RSQ is going to come into picture whenever there is multiple raw materials in the question. So let's start. Computation table. Computation table. Multiple raw materials. 4 columns will be needed and an outer and a column in the side. So you will have material SP into SQ, SP into RSQ, SP into AQ, AP into AQ. Material SP into SQ, SP into RSQ, SP into AQ, and AP into AQ. Term material means the raw material here, not the end product. We are more bothered about the raw material, not the end product. So in the material column, we have semi detonators. These are the two raw materials, SME and detonators. Standard prices 40 and 20. I am not writing this. I'll explain why in some time because I don't need this in this question. I'm not doing SP into RSQ because I don't need this. Why don't need, you'll understand in some time. 40, 20, 40 and 20. Actual prices this divided by this divided by this. Can you tell me the actual price? Amount divided by quantity. SME and detonators are the two product. Amount divided by quantity.
Therefore, you can make a eight.
Sorry, voice is not clear.
Eight servicing.
Okay, let me calculate because I don't know. Divided by 167 200. 38 into 167 200. 24 27 200 by 118 400. 20.5 into 118 400. Same things will come here. 118 400, 167 200. Most important part is calculating standard quantity. That's the most important part. Why we are not calculating RSQs? RSQ will help you in calculating mix and yield variance. RSQ is used to calculate mix and yield variance. Question has not asked for that. If the problem asks, then we will do RSQ also. SQ is equal to SQ is equal to actual output into input by output. Actual output into input by output. Actual output into input by output. Let's first do it for the first raw material, SME. Now listen, SQ is sum of two items because you have two finished product. If you have three finished product, it is sum of three items. Four finished product, sum of four items. First finished product, we have produced 20,000 tons iron ore. Iron ore is 20,000 into 2.4 by 1. How 2.4? You need 2.4 kg per, you need 2.4 kg per ton. 20,000 units you have produced into 2.4 kgs per unit divided by 1 input output. The second product we have produced 58,000 overburden. For that the ratio is 1.9 is to 1. 2.4 is to 1 and 1.9 is to 1. 2.4 is to 1 and 1.9 is to 1. Two products. We are producing two products. Be very clear. Two products are getting produced. First product 2.4 is to 1. Second product 1.9 is to 1. We get this as 158 200. 158 200 first product SME. 20,000 into 2.4, 58,000 into 1.9 by 1 because per unit you had to do actual output into input by output. You can keep increasing the number of products and the ratio will keep going on like this. Second product is detonators. SQ is equal to 20,000 into same logic. 20,000 into here two pieces per ton. So into 2 by 1 and 58,000 into again two pieces 2 by 1. 20,000 into 2 by 1, 58,000 into 2 by 1. 20,000 into 2 by 1, 58,000 into 2 by 1. Be 1,56,000. 156. I think that's all. We are kind of done with the question. We will calculate the variances by applying the formula. You can apply the formula and then get the variances. I'll wait for some 2 minutes.
Sir,
Yeah.
sir, can you explain that part again? SQ one.
Which one? Which part?
SQ.
Okay. SQ is calculated with the help of actual output. So SQ formula is actual output into input by output. When I see what is actual output 20,000 tons of iron ore produced 20,000 tons of iron ore and 58,000 tons of cubic meter. So 20,000 into 2.4 is to 1, 2.4 kg per ton. 20,000 into 2.4 input by output plus next product also you need raw material 58,000 into 1.9 is to 1 because you are needing 1.9 kg per cubic meter. So 2.4 kg per ton, 1.9 kg per cubic meter. 20,000 units of iron ore produced, 58,000 units of overburden produced. So 20,000 into 2.4 by 1, 58,000 into 1.9 by 1.
Yes, sir.
Calculate the variances. They have not asked for price and yield. Listen, if they ask you price and yield, then your standard mix is this 1582 is to 1560. This is the standard mix because your RSQ is the total of actual quantity in standard mix. What the standard mix is 158 200 is to 156. This 3 is to 1 is of no use. This is the ratio between overburden soil and iron ore. I am not going to use that in any way. I wanted the ratio of not iron ore and overburden. I want the ratio of SME and detonators, which is 1582 to 1560. Material cost variance. Let me know in case if I made any calculation errors or something. Material price variance 90 lakh 56,000, 87 lakh 80,000. Material usage variance. We'll have to obviously write the formula and all. 94 lakh 48,000 minus 90 lakh 56,000 minus 90 lakh 56,000. Let me know if there are any doubts here. Any doubts on this computation, please let me know. I've not done SP into RSQ 667 200 with 275 200 and 392. Calculation is not the important part. Getting the table right is very, very critical. Let me know if there are doubts. Hope this is done. Any doubts on this, please let me know. Let's move to question 3. Go through the question. Please read through the question. in a manufacturing company, standard unit of the production is fixed at 1 lakh 20. Now listen, this is not standard unit, this is budgeted unit, because they will interchangeably use the word. Standard unit means you will have to calculate with the help of actual time. Standard output is calculated with the help of actual time. So standard output basically given in the question is nothing but budgeted output. Somewhere we will use budgeted output later on, but this is budgeted output and not standard output. Overhead expenditure is fixed, variable, semi-variable. I have this category of semi-variable. This can make it a little complicated. Actual production is 8,000. Each month has 20 working days. So budgeted is 20. Actual is 19. If you have budget and actual both, you can calculate calendar variance. You can calculate calendar variance. Each month has 20 working days. During the month, there was one holiday. So budgeted is 20 days. Actual is 19 days. Actual overhead is variable, fixed and semi-variable. Fixed is 1190. Variable is 480. Semi-variable is 192. Semi-variable charges include 60% of fixed and 40% of variable. So first of all, I cannot work with this item called a semi-variable to solve a question. Either the semi-variable has to go to fixed or to variable or to both using some calculation. So I will have to shift the semi-variable. They are saying semi-variable expense has 60% fixed, 40% variable. 60% of this is fixed, 40% is variable. So I will remove the semi-variable from the question first. How do I remove? Now right. Budgeted fixed overhead is equal. Budgeted fixed overhead is equal to 12,000 plus 12,000 plus 60% of 1,800. 60% of 1,800. 12,000 plus 60% of 1,800. 60% of 1,800. This fixed overhead. Variable overhead. Variable overhead. 6,000 plus balance 40%. 6,000 plus balance 40%. Balance 40%. So semi-variable is not there in the question. We are removing semi-variable. We are removing the semi-variable from the question. Budgeted is 12,000 plus 60%. Variable is 6,000 plus 40%. Actual fixed overhead is equal to 1190 plus 60% of 192. 1190 plus 60%. 60%. Actual variable overhead is 480 plus 40%. 480 plus 40%. 480 plus 40%. So we have removed semi-variable from the question. We have removed semi-variable from the question, and every problem you will have to do this. In case there is semi-variable, you will have to remove that from the question. We have removed the semi-variable. Now onwards, we can start calculating everything they've asked. First point was to remove semi-variable from the question. So that is done. Any doubts on this? So this is like your working note 1, basic information. Then we will do variable overhead variances, fixed overhead variances. Question has asked for overhead cost variance. Overhead cost is variable plus fixed together. Fixed overhead cost variance, variable overhead cost variance, volume variance, expenditure variance, calendar variance. Calendar is only for fixed overheads. So we will have to calculate all these variances. We are required to compute all these variances. So working note 2, variable overhead variances, VOH variances. Variable overhead variances. We don't have any multiple categories and all here. POH, we don't have any categorization. SR into SH or SR into AO. Standard rate into standard hours or standard rate into actual output. SR into AH or SR into SO. All this I have discussed in the regular videos. AR into AH or AVOH. AR into AH or AVOH. SR into SH, otherwise called SR into AO. SR into AH, otherwise called SR into SO. AR into AH, otherwise called as AVOH. Standard rate per unit is equal to budgeted variable overheads by budgeted units. Budgeted variable overhead by budgeted units. Budgeted variable overhead you calculated 6720, 6720 by adding that 40%. 6720. Budgeted output is 1,20,000. It is not standard. Again, I'm repeating. You cannot estimate the standard for a year. Standard has to be calculated with the help of actual hours divided by 1,20,000. Normally calculate SR per unit and SR per hour first. 0.056 per unit. SR per unit is equal to 0.056 per unit. SR per hour is equal to PVOH by budgeted hours. Not possible. They have not given any data on number of hours in this question. There's no information about number of hours in this question. No information about number of hours in the question. SR per hour is not possible. Just give me a minute. Zero point zero five six into actual output is 8,000 units. 0.056 into 8,000. 0.056 into 8,000. Standard output is not given in the question. I'm repeating. Standard units of production fixed at 1,20,000 for the year means budgeted. So I don't have SO because to calculate SO you need actual hours. Not possible and not needed also. I don't need this for the question. This is not possible. 0.056 into 8,000. Actual variable overhead is 556.80. 556.80. Let me know if you have doubt here. Only cost variance is asked. They have not asked for expenditure or efficiency because it's not possible. This question has not given me what is the standard output, or I cannot calculate it also. Standard output cannot be calculated and not given in the question also. Standard output is something you cannot calculate and it's not given in the question as well. POH cost variance is equal to SR into SH minus AR into AH. Or you can say SR into AO minus AVOH, whatever name you want to use. SR into SH minus AR into AH. 448, 556.8, 108.8 adverse, 108.8 adverse. This is VOH cost variance. Not ask for expenditure or efficiency because it's not possible. Not ask for VOH expenditure or efficiency because it's not possible to calculate it. Any doubts on this? Next working note. Computation of FOH variances with calendar. Why with calendar is because question has information on budgeted days 20, actual days 19. The budgeted days is 20, actual days is 19. Both the information is there in the question. SR into SH or SR into AO, SR into AH or SR into SO, SR into PH or SR into PO or PFOH. Possible fixed overhead, budgeted fixed overhead, actual fixed overhead. Write it. SR into SH or SR into AO, SR into AH or SR into SO, SR into PH or SR into PO or PFOH, budgeted fixed overhead, actual fixed overhead. Similar calculation. SR per unit is equal to BFOH by budgeted output. Budgeted fixed overhead by budgeted output. Budgeted fixed overhead is 13,080. We did this calculation. 13,080 divided by 1,20,000. 080 divided by 1,20,000. 0.109 per unit. R is not possible. I'm not writing it again. R is not possible in this question because there's no data about hours in this problem. No data about hours in this question. SR per unit is 0.109. SR per unit is 0.109. So 0.109 into 8,000. SR into AO 0.109 into 8,000. Let me know in case you need any explanation at any point of time. 0.109 into 8,000. Not possible. I'll come to PFOH in a minute. Now listen. BFOH is 13,080 for 1 year. BFOH is 13,080 for 1 year. We are doing calculation for 1 month. We are doing April month calculation. We are doing the calculation for April month. So the BFOH which we calculated earlier was for a year. So what we did is we did SR per unit. We use the annual fixed overhead by annual output. Now I am calculating variance for a month. So this is 13,080 divided by 12. 13,080 divided by 12. BFOH is 1090. BFOH 1090. AFOH is 556, not 556, 1305. 0.20. 1305.20. 872. PFOH alone is pending. I'll explain. 872 first column, second column not possible. PFOH will calculate. BFOH is 1090, AFOH is 1305.2. What we did is we removed the semi variable cost, removed some part to fixed, some part to variable depending on the ratio given. Next, computation of PFOH. Computation of PFOH. PFOH. Logic for PFOH computation is 20 days. It's like this: budgeted days is equal to budgeted fixed overhead. So 20 days equal to 1090, 19 days equal to question mark. 20 days is 1090, 19 days is question mark. PFOH is calculated based on actual days. Based on actual days. 20 days 1090, 19 days is PFOH. PFOH is equal to 1035.50. I'll give you some 2-3 minutes. Please calculate all variances they have asked. There's one variance called overhead cost variance. That alone I'll take you through. Complete all variances which they have asked in the question. Fixed overhead cost variance, fixed overhead expenditure variance, whatever they have asked. Whatever they have asked, please calculate all of them. I'll wait for some 2-3 minutes. I'll also get some rest. You keep doing it. Get the variances, please. Get all variances which are asked in the question. All the variances. Formula and all we discussed in the regular videos. I'm not getting into formula logic and all now because that will take away a lot of time. FOH cost variance is SR into SH minus AFOH. Cost is SR into SH minus AFOH. Expenditure is BFOH minus AFOH. Volume is SR into SH minus BFOH. Calendar is PFOH minus BFOH. Any place, any calculation errors, please let me know. If at all any calculation errors are there, please let me know. And any place there are doubts, please let me know. If there are any doubts, please let me know. Okay, there's one more variance which is asked in the question, which is overhead cost variance. I hope this is clear. Anybody has any doubts on this, please let me know. Anywhere there are doubts, calculation errors, please do highlight it to me. Overhead cost variance is nothing but FOH cost variance plus VOH cost variance. Two variances together. FOH cost variance plus VOH cost variance. When you add them together, you get overall cost variance. FOH is 433, it was 108. 108.8 adverse is VOH. 433.2 adverse. 108.8 adverse. 433 and 108.8. 542 adverse. Two variances together. Variable overhead cost variance and fixed overhead cost variance. When you club them together, you get this variance. 542 adverse. Any doubts on this? Slightly different from the normal set of questions we have. 108. This was 433.2. And together is 542 adverse. Any doubts on this? We'll move to question 4 then. Go through the question. Go through the question. Okay, a manufacturing department has employed 120 workers. Standard output is 20 units per hour. I have been explaining this in the regular class also. 20 units per hour by having 120 worker. So it would mean you produce 20 units in 120 man hours. One is calendar hour. 120 people are going to work means 120 man hours. We work with all problems using concept of man hours. So 20 units for 120 man hours. Standard rate is 25, 48 hours week, 1000 units produced, 5% abnormal idle time, hourly rate of wages. So this is single labor because the category is single only. They have not mentioned skilled, semi-skilled, unskilled, that like that. So category is single, but this problem we are required to do single labor with idle time. This is a problem on single labor with idle time. Why idle time? Because 5% of the time lost due to abnormal reason. 5% of the time is getting lost due to abnormal reason. So let's start. SR into SH, SR into AHW, SR into AHP, AR into AHP. This is what will come in the computation table. What will come in the computation table? SR into SH, SR into AHW, SR into AHP, AR into AHP. Standard rate into standard hours into actual hours worked, actual hours paid, and then actual rate into actual hours paid. Standard rate given in the question is 25. Standard rate given in the question is 25. 25 per labor hour. 25 per labor hour. 25.7. 25.7. 25 per hour and 25.7. 25.7. Actual hours paid is equal to actual hours into number of workers. Always the concept is man hours. Concept is always man hours. Actual hours into number of workers. Into number of workers. They're saying 1 week consisted of 48 hours. So I would have paid for 48 hours. I've lost some time, that is called idle time. That is a loss. So 48 hours, 120 workers. 5760 hours. 5760 hours. 5760 hours. HP is 5760. 48 into 120. 48 into 120. 5760 hours. AHW is actual hours worked is actual hours paid minus 5% loss. Some idle time of 5%. There is some idle time of 5%. Idle time of 5%. 5472. 5472. Give me a minute. To try calculating SH. Try calculating SH. SH will have to calculate. Standard equation. Standard equation is basically going to tell what is the relationship between output and hours. I told you relationship 20 units per hour, which is calendar hour, and in 1 hour 120 people will work. In 1 hour 120 people are going to work. 20 units is equal to 20 units is equal to 120 hours. 20 units is equal to 120 hours. Actual output is equal to standard time. 20 units per hour. 1 hour consists of 120 people. So 120 people into 1 is 120 hours. Actual output is equal to standard time. 1000 units is equal to question mark. Basically, we are going to produce 20 units in 120 hours. So balance part can kind of complete now. Wait for some time. All the variances, which is more a formula application. Get all variances. Get all the variances which have been asked in the question. Get the variances. Please keep calculating it. These are your variances. Let me know if there are doubts here. Getting the variance is the easiest part of the chapter. Important is getting the computation table right. Once we get that correct, balance is more of formality. Let me know if there are doubts here. Any doubts on this, please let me know. So your cost is 1968 favorable, 4032 for rate, efficiency 13200, idle time is 7200 adverse. What we have got. Getting the computation table right is the most important part of the chapter. Okay, with this, the standard costing questions are over.